Imagine a society where cash is, well, almost obsolete,
Hmm.
and where just two apps pretty much dictate nearly every financial interaction you make.
It sounds like science fiction almost.
Right. But we're not talking about the future, we're talking about China today.
Right.
A place where a payments revolution has unfolded at, frankly, warp speed.
It really has. An incredible transformation.
So today, we're doing a deep dive into China's payments industry. It's a real global outlier, isn't it? Defined by its huge scale, its tech maturity,
Hmm.
and this truly unique path it took, basically bypassing traditional banking infrastructure entirely.
Yeah, that leapfrog effect is key.
Exactly. Now, you've shared a fascinating stack of sources, articles, research papers, market analyses, painting a really detailed picture of this dynamic landscape.
There's a lot to unpack there.
There is. Our mission today is to pull out the most important nuggets for you, the listener. We want to help you understand how China went from cash to digital so fast.
Who the big players are.
Yes. And crucially, how the state is now stepping back in, reasserting its control.
It's this fascinating dance, really.
It is. It's not just about tech. It's this ongoing effort to find what the sources call a strategic equilibrium between innovation and state control. And that has massive global implications.
Absolutely.
Okay, let's unpack this. China's payment system. It just seems to have completely redefined what's possible, leaping over decades of what we'd call traditional development. How on earth did they manage such a massive shift?
Well, it's fascinating, you said, China's lack of legacy infrastructure, the stuff developed economies, already it actually became its greatest strength.
Right, the lack of something became an advantage.
Precisely. It allowed them to innovate without being tied down by existing systems. For decades, places like the US and Europe built payment systems around credit cards.
The standard model.
Right. But China had really low credit card use, inefficient networks. This left this critical void. Most businesses, most people were just reliant on cash.
So that gap in the market was actually their biggest opportunity. They could build from a clean slate.
Exactly. And what they built was, frankly, ingeniously simple. In less than 10 years, mobile payments and QR codes just became the absolute standard.
QR codes. So simple.
So simple. Merchants didn't need expensive contactless machines. They just needed a printed QR code, literally a piece of paper and a basic smartphone.
Much lower barrier to entry.
Much lower. This low-cost model meant mobile payments could spread incredibly quickly, achieving a ubiquity that traditional card systems just couldn't match in that time frame.
And this revolution, as you called it, really changed the game. It disintermediated traditional banks, right? Bypassed them.
Completely. Tech companies, social networking firms, think Alibaba, think Tencent, they stepped right into that vacuum.
And started holding all that core transaction data.
Yes, driving innovation and challenging the bank's long-held position. The scale of this shift is, well, it's breathtaking.
And the numbers really back that up. This market, already valued at $10 billion US in 2024, is projected to shoot up to nearly $48.4 billion by 2032. That's fueled by almost a billion active mobile payment users.
A billion users. It's hard to even picture.
It is. And mobile payments now make up over 70% of all consumer transactions. Cash, cards. They're almost secondary now.
And this explosive growth, it wasn't just luck. It came from two powerful forces working together.
Okay, what were they?
First, just huge consumer demand, especially younger people wanting convenience, security, all those integrated services these digital wallets offer.
Process.
And second, and this is crucial, proactive government support. Official policies pushing for a cashless society, combined with massive investment in digital infrastructure.
Like 5G.
Exactly. Over 2.6 million 5G base stations. That created the foundation for seamless mobile payments pretty much everywhere.
Okay, so let's get into the titans of this digital world, Alipay and WeChat Pay. Because this is where you see how deeply integrated these platforms have become. They're not just payment apps anymore.
No, they're super apps.
Yeah.
That term really fits. They are deeply embedded in the daily lives of over a billion users.
A billion. Wow.
And together, they command, what, over 94% of the market share. It's an incredible duopoly.
Basically unchallenged.
And user preference reflects that. Alipay sits at 92%, WeChat Pay at 85%. They aren't just options. For most people, they are the standard.
And it's interesting how their different origins kind of shape their DNA, right? Alipay came first.
Yes, launched by Alibaba back in 2004, mainly to support its e-commerce site, Taobao.
Ah, so it started with shopping.
Exactly. It gave it that commercial transaction-focused DNA. They integrated things like instant credit pretty early on, and by mid-2024, it had reportedly 1.43 billion global users.
Global users, not just China.
Global reach, yeah. Then you have WeChat Pay from Tencent. That's an extension of WeChat, China's dominant messaging app.
The social one.
Right. Its growth was famously kickstarted by the virtual red envelope, feature a digital twist on a cultural tradition.
I remember reading about that. Ingenious.
It made it the natural choice for sending money between friends, splitting bills. It had 1.133 billion active users in 2023.
So one commercial, one social, basically covering all the bases.
Pretty much. They dominate by catering to both commercial and social needs, embedding everything from ride-sharing to utility bills right into their ecosystems.
Okay, so you have these two massive private giants controlling almost everything. You'd think the state wouldn't let that stand indefinitely.
And you'd be right. That's where the state's countermove comes in, bringing UnionPay back into the picture more forcefully.
UnionPay, the state-owned player.
Exactly.
Yeah.
Still strategically very important. It's the third most preferred option. Its strength is its deep link to traditional banking and the fact it's accepted at basically all physical points of sale.
So it gives the government a direct hand in the system.
It does. A direct link, a backstop, and frankly, a source of competitive tension against Alipay and WeChat Pay.
And we see that tension in things like the interoperability mandates.
Yes, exactly. The government doesn't want these private companies creating closed-off walled gardens. So they've mandated that Alipay and WeChat Pay open up their QR codes to competitors, like UnionPay's Cloud QuickPass,
Keeping the state-backed infrastructure relevant.
and maintaining a degree of control. It prevents the duopoly from becoming completely isolated.
Right. So even with UnionPay providing some balance, the sheer power of the private giants must have prompted a bigger response from the central bank.
Absolutely. Which leads us to, arguably, the most significant development yet, the rise of the digital yuan, the ECNY.
The state's own digital currency, a direct reassertion of authority.
That's the core of it. The ECNY is the biggest state intervention we've seen in this space. Officially, the People's Bank of China, the PBOC, talks about efficiency, financial inclusion.
The usual justifications.
Right. But the sources are pretty clear. The fundamental strategic objective is broader. It's about reasserting monetary sovereignty and managing the systemic risk from having so much financial activity controlled by just two private companies.
So they started thinking about this way back.
PBOC research began in 2014, development approved in 2017. This has been a long game.
And the ECNY itself, it's different because it's a direct claim on the central bank, right? Backed by the state.
Exactly. Sovereign credit.
Yeah.
Designed as a secure, reliable backup to the whole retail payment system.
But what's really interesting is how they went about it. They didn't just try to crush Alipay and WeChat Pay.
No, that's key.
Right.
The government did not choose to fight the tech firms head on. Instead, they strategically co-opted their expertise. They invited Alibaba, Tencent, Huawei, others to collaborate on the ECNY project. The goal seems to be use their infrastructure, their reach, but build a system the state ultimately controls.
Clever. And the pilot program is huge.
Massive. The largest CBDC trial anywhere in the world. And adoption is accelerating fast. By June 2024, transaction volume hit 7 trillion ECNY.
7 trillion.
Yep, that's nearly $1 trillion US dollars. Almost 4 times the volume from 2023. And the trials have expanded from just 4 cities initially to 29 cities across 17 provinces now.
Wow. And it's not just for buying coffee, is it? The use cases are broader.
Much broader.
Yeah.
It's being used for public transport and education, healthcare, even paying civil servant salaries in some areas.
And it has that tech advantage, the offline payments.
The dual offline payment function, yes. 2 devices can transact directly, even with no internet. That's a big deal compared to the private apps.
Especially in areas with spotty coverage. Boosts financial inclusion, too.
Definitely. And while it's mainly domestic for now, there are clear international signs. Hong Kong residents can get ECNY wallets. And it was used, remember, in that cross-border oil deal back in October 2023.
Right, linking it to the bigger goal of internationalizing the yuan.
Absolutely. It's part of that broader geopolitical strategy, a potential challenge to the dollar's dominance down the line.
Okay, but let's talk about this competitive tussle. How does the ECNY actually compete with Alipay and WeChat Pay? The official line seems a bit nuanced.
It is. A PBOC official famously said the ECNY will not compete.
Yeah.
They described it as the money in the wallet, while the private platforms are just the wallets.
So ECNY is the base currency, the others are just interfaces.
That's the official framing. But many other sources we looked at see it differently. They call ECNY bad news for all third-party payments companies.
Why?
Because it's seen as a way to reduce reliance on private payment platforms. Long story short, the ECNY is a strategic tool for the state to regain control.
So it doesn't need to have a better user experience necessarily.
Not really. It just needs to be a viable sovereign alternative, something the state can use to regulate, to limit private influence, and ultimately ensure the government stays the ultimate authority in finance.
Which brings us squarely to regulation and data.
Yeah.
Because this isn't just about currency. It's about the state using its power to manage the whole system, including the data flowing through it.
Exactly. The PBSC's role has definitely shifted from relatively hands-off to much more active control.
We saw that with the licensing changes.
Yes, the move to a long-term licensing model for non-bank payment institutions instead of 5-year renewals. And crucially, the number of valid licenses dropped sharply from 271 down to 169. That signals consolidation, tightening control.
But the really big move, according to the sources, was centralized clearing.
Arguably the most powerful move, yes. Since 2018, all mobile payment transactions have to be routed through a state-backed clearinghouse called Wanglian.
And the official reason is?
Curbing money laundering, fraud. Plausible enough.
But the de facto outcome?
Unprecedented access to the proprietary user data of mobile payment giants. The state gets this incredibly intimate view of citizens' daily lives, spending, location, habits.
So it's not just about economic stability.
No. The sources suggest it's also very much about political and social control. That data becomes a strategic asset for the state, potentially feeding into things like the social credit system.
Which raises the data privacy question, because China does have strict privacy laws, right? Like PIPL.
It does. The Personal Information Protection Law, PIPL. And they do enforce it against companies you mentioned, those 70 apps flagged in August 2025 for violations. There are real penalties.
But there's a catch.
There's a big catch. While PIPL aims to control the private sector's use of data, it doesn't offer citizens the same protection from government surveillance.
Ah.
The very systems that centralize data for state oversight, like that Wanglian clearinghouse, make citizen data more accessible to the government itself. It's a dual standard.
Fascinating. Okay, so the ECNY isn't just domestic, it's got this whole geopolitical dimension too.
Definitely. China is actively promoting it internationally. It's seen as a way to expand financial influence, maybe through the Belt and Road Initiative.
And also as a way to protect against sanctions, the weaponization of payment systems.
That's part of the thinking, yes. If transactions can happen outside the dollar-dominated SWIFT system, it offers some insulation.
But how's that going in reality? The yuan's global share is still small, isn't it?
It is growing, but still small. Around 2.88% of global payments by mid-2025, compared to over 47% for the U.S. dollar. Big hurdles remain: lack of full convertibility, strict capital controls.
So ambition versus reality, and this has sparked a kind of digital currency race.
You could call it a digital currency Cold War. China pushes the state-run ECNY, while the U.S. looks at things like the Genius Act for dollar stablecoins, trying to keep the dollar dominant in the digital age.
And meanwhile, Chinese platforms like Alipay and WeChat Pay are hitting roadblocks trying to expand overseas.
Significant hurdles, especially in the U.S. Concerns about economic competition, sure, but also censorship, national security, especially given user agreements often point back to Chinese law for dispute resolution.
Right. Okay, so let's pivot to the practical side, especially for outsiders. Despite policies trying to make things easier for foreigners, it still sounds challenging.
It can be. There are significant practical challenges. Linking your international card to Alipay or WeChat Pay often gives you only limited features.
Like what kind of limits?
Well, you often can't do peer-to-peer transfers, sending money directly to a friend. Or use those virtual red envelopes we talked about. Those core social functions might be locked.
So you can pay a merchant, but maybe not split a bill easily.
Exactly. It highlights a different user experience design, perhaps prioritizing merchant payments for visitors.
And going completely cashless isn't a guarantee either.
Not for foreigners, no.
Yeah.
Cash is definitely less common now, but acceptance of foreign bank cards can still be hit or miss, especially outside major cities or in smaller shops.
So you might still need some actual cash, or maybe get a local UnionPay card if you're there longer term.
That's often the practical advice, yeah.
Yeah.
Have a backup.
Despite these friction points, the overall Chinese fintech market projection is huge. We're talking potentially 10 to 13 trillion US dollars by 2032.
The growth potential is still immense, driven by that expanding middle class, continued investment in the digital economy.
And AI and big data integration.
That's going to be a massive driver. Think about it. Mobile payments generate this unbelievable trove of consumer data.
Right.
Fintechs are using AI and big data to analyze that, creating new models. Things like alternative lending for people or small businesses who couldn't get traditional bank loans.
Using payment data to assess creditworthiness.
Exactly. It creates this virtuous cycle.
Yeah.
More data leads to better tech, which leads to new services, generating more data, and so on.
But this rapid growth and data concentration surely come with risks.
Absolutely. Cybersecurity is a constant concern. Data breaches, fraud, phishing. Telecom fraud is still a big problem they're tackling.
And regulatory uncertainty.
That too. The PBOC's policies keep evolving. That market consolidation we mentioned, it can create unpredictable shifts for businesses operating there.
Plus, the market structure itself, that duopoly, now with the ECNY entering the mix.
Yeah, risks of anti-competitive behavior from the giants and potential market fragmentation as the ECNY carves out its space. It's complex.
So looking at the future, it's not really about one winner taking all. Alipay versus WeChat Pay versus ECNY.
The source suggests it's less about a winner-take-all battle and more about a strategic equilibrium between state and private power.
Finding that balance.
Exactly. The ECNY doesn't necessarily need to displace Alipay and WeChat Pay to be successful. Its role might be more about introducing stability, ensuring state control, and fundamentally reshaping the governance structure of the entire industry.
Which really raises a huge question for other countries, doesn't it?
It does. How do other nations balance the incredible innovation we see from private tech giants with the need for sovereign control, financial stability, data protection? China's journey is just a fascinating and maybe cautionary case study in that really complex dynamic.
So let's recap. We've seen how China's payment scene basically leapfrogged traditional development, creating this digital-first economy dominated by super apps. And now we're seeing this profound rebalancing act. The state is stepping back in, using the digital yuan, using regulation to really assert its central role.
Reclaiming ground, essentially.
Right. So for you, the listener, this isn't just some story about China over there. It's genuinely a glimpse into the potential future of global finance. It forces us to ask, what is the right balance between private innovation, consumer convenience, and state control?
That's the trillion-dollar question, isn't it?
It really is. This isn't just a straightforward battle. It's this dynamic push and pull, constantly shaping the relationship between the market and the state. So think about how this strategic equilibrium playing out in China might influence how your own country approaches digital currencies, data privacy, the sheer power of big tech.
What pieces of this model might we see adopted or reacted against elsewhere?
Exactly. What aspects do you think will spill over into the global financial system next?
Lots to think about. Thank you for joining us on this deep dive.
Keep digging, keep questioning.
And stay curious.